good evening, and thanks for listening to the graveyard shift at the end. Hopefully, I'll make it interesting. We've had an amazing year at Condor, which I'm going to just show you a few new slides of what we've been up to. This is the entrance to the project. I've just had 3 weeks in Nicaragua. We built this road at 700 meters long around the mine site infrastructure. It demonstrates we have the engineers to do that, the civil engineers, and there's culverts and so forth that go in. We own all the land around the processing plant location. There's our statutory disclaimer. A copy of this will be on our website. This is a quick introduction to the project. Landia project's in Nicaragua. It's fully permitted. Our base case is to produce 100,000 ounces of gold a year, and then increase that to 150,000 ounces of gold a year by adding in the underground. We have recently filed on CNR in Canada a PEA level report saying 150,000 ounce per annum production for 9 years is possible with what we know today. We're fast tracking this with a mill that we purchased, and we've got 3 pits on point number 2 that are fully permitted, and there's the breakdown of the 3 pits with 1.1 and 2 million ounces. This is super high grade. We'll do it in 2 stages, as I mentioned, to keep the capex down to begin with. We're producing an FS, a bankable feasibility study, which I'll come on to, which is designed there to plus or minus 15% capex and opex to attract the bank debt for the project or debt for the project. And we're pretty undervalued on an ounce in the ground or price to book value and low all-in sustaining cash costs. So Nicaragua, gold is the largest export according to the Chamber of Mines. I had a Christmas lunch 10 days ago in Nicaragua with them. The government is very, very supportive. They've got a good mining regime. They're permitting everything at the moment within reason. There are half a dozen listed companies operating in Nicaragua. The exchange controls are fully convertible, unlike many parts. They let you own 100%. There's no free carried interest, and there's great infrastructure. So it's a good jurisdiction, certainly the best in Central America and probably the best in the whole of Latin America from a mining perspective. We have a low sulfidation epithermal vein system, which is quite structurally controlled. There are 7 deposits here, which you can see. These can all be expanded by drilling down dip and along strike. And we have about 2.4 million ounces of gold if we include the silver content as a gold equivalent, and it used to be an old mine with a project. So these are the 3 pits that we've permitted. Everything in magenta or purple there is fully permitted. When I say fully permitted, it's the master permit to construct and operate the mine. So everything is permitted from the open pit here. The big pit of Landia open pit is 900,000 ounces of gold in it. So the pit's permitted to be extracted over 7 years. Waste dumps, processing plant over here where my mouse is, a tailing storage facility, and 2 other smaller pits. The FS study that we're doing, the bankable study, is being based solely on the main Landia open pit. There's plenty of gold in that to fund the debt finance for the mill that we've purchased. Underneath the pits, we've got about 1 million ounces of underground, which can be brought into the mine plan later. Here's the site. This picture took from my phone. It's showing that we've cleared the site here. And we have a commitment under the law to reforest for 10 trees for every 1 that we cut down. So there's a big inventory done before we actually do any form of tree cutting. In fact, we have a nursery there of 8,000 trees or saplings, and our commitment is over 50 times more than is required by the local law. We're going to reforest over 200,000 trees, and we've reforested about 12,000 so far out of the 200,000. But the site clearance is good. This is the PEA we put out in October. This is really where we want to be. This is the end of the 2 stages. It's 4,000 tons a day or 1.4 million tons a year. It's the open pit plus the underground. Fantastic IRRs of 54% and net NPVs. By that I mean after tax, after royalty, after upfront capex of 418 million, based at $1,700 an ounce. And this gives you 150,000 ounces of gold per annum for 9 years, almost 1.5 million ounces production on what we know today. We think that can be materially expanded. The upfront capex on this study was 160 million, so very low in mining terms, and the payback's 12 months because it's super high grade, very economic. The all-in sustaining cash costs are 950 over the life of mine, and the open mill feeds 10 million tons at 2.77 grams for 950,000 ounces, and the underground mill feeds 5 million tons for 657,000 ounces. So that's where we would like to be, and we're looking to get there in 2 stages. Here's the main pit we're focusing the FS study on. We've put in 3,500 meters of drilling this year. These are the, I know in all there's over 80,000, so 40,000 on this particular pit. So it's drilled like a Swiss cheese. We put it into 25-meter drill spacing, some great intercepts. And the one we had this year was 21 meters true width at 6.5 grams, and it's very shallow. This is a photo of the drilling we did. And the drilling is designed to give us 6 to 8 months of mill feed at 25-meter drill spacing. So this is ready to extract. On our estimates, this gives 445,000 tons at 4.2 grams a ton, and we can produce 54,000 ounces of gold out of that. That's only 35 meters deep, so it's really quick cash flow. We would also have the prospect of toll milling this, i.e. extracting it ourselves and taking it to somebody else's mill, or we put it through our own mill. But it needed to be drilled to this tight drill spacing to confirm the geological interpretation, and that's come back positively. That resource is being updated. We have all the drill results back, and you'll have seen those in various press releases, and some of those at the bottom. The other small feeder pit called Mestiza, we completed 8,000 meters of infill drilling there. That's to convert the inferred to indicated. And that would, if that comes back, which we think it will do, assuming that it can produce 80,000 ounces, it'll give us around about $90 million of operating profit, and the pit's only 90 meters deep. And some great resource, great numbers came back from the infill drilling, 3.6 meters at 29 grams, 4 meters at 15 grams. High grading is important in terms of giving us a quick payback on any debt and capex, obviously increasing the return on investment and keeping down a low capital intensity, because obviously you need smaller equipment if you're going to put higher grade through. And this is demonstrating that we can get 1.6 million tons at 4.5 grams. We can produce 225,000 ounces from open pit on this high grade scenario. On the mill that we purchased, it's 2,300 tons a day, so the nameplate capacity at 4 grams, not 4.6. We can produce 100,000 ounces, and so that's our base case, and I'm basically giving you the first 2 years of production and where that can come from. The feasibility study. Now, this is a major undertaking for any company. The engineering on this is normally 30 to 50% engineered. It can be up to 80% or fully engineered, and in some of our studies we go way beyond. For example, the tailings storage facility, where we have drawings issued for construction, that's all completed. So the operational studies on the ground that we've really focused this year are all complete for the FS. So we have the processing plant design completed. We had hand-on engineering on site last week. I've just come off on a call from them. We have the surface hydrology completed. We have the tailings storage facility and water retention dams completed. The metallurgy is completed. That's from the lab. We're now waiting for a report from SRK on it. The dewatering, we've completed that. We've had 5 different drill holes for a dewatering test for the pits. That was completed when I was on site about 10 days ago. We got to do the mine schedule, the geotechnical. We had to do 2,500 meters of drilling. We've completed that. And this is all about de-risk, get the project shovel ready. And that report is due out end of Q1 next year. So we're now in, SRK should now be in the report writing stage and finalizing all these studies. Now, the open pit in the PEA gave us 9.3 million tons at 2.56 for 685,000 ounces of gold. So that's the indication of what we're looking at for the FS study. So there's plenty here with over $300 million of free cash flow to finance the debt component. So it's all about producing a document that you can get debt on to do the project financing. The mill is all in the country, bar some pieces held for us by First Majestic in Mexico. The good news on that is that they paid for half of it in shares at 50p, a material premium to the current share price. We've tax exonerated or tax exempt all the pieces coming into Nicaragua, which is a great benefit, and the team done a brilliant job bringing it all into the country. We bought that earlier this year. It can expand by 22% by a bigger motor. That's all it needs. This is the plant layout. So this was given to me today. It's the first time I've shown it in public, and I'll just run you through this. This is fully designed. This is the final design you'll see in the FS. We've de-GPSed all the locations. So here's a haul road, if you can see my mouse. And where there's a little dump truck here, that's the primary crusher. That's the first bit of crushing that happens from the ore from the open pit. It goes onto a belt here and smaller rock. There's a weightometer, moisture, content, assays are taken, lime is added. Then it goes to the SAG mill that we've purchased, and it gets crushed down to a fine sand. Then it goes into thickeners and tanks. It's a very simple metallurgical process here. We're very pleased with the layout. We've got over a 1 million ton stockpile should we need that. We've got gold drums in here. We've got plant maintenance, reagent stores. We've labeled everything from the laboratory to the light vehicle maintenance. Over to the right, we've got the powder magazine, explosive magazine. We've got heavy equipment shops all done, truck and operating shops. This is really detailed. We've got admin engineering shops by the main gate here. I walked over this 2 or 3 times when I was on site, listening to the experts on where we're going to position everything for the layout. So this is now just basically de-risked. It's just ready to build, pretty much. And so we're delighted with this layout for the processing plant. Further resource expansion. I just have a quick look at my watch. I'm going to just go through this quickly and leave some time for questions. We essentially believe we're on a 5 million ounce plus gold district. While we've been taking time to get permits and so on and buying land, which we've now bought pretty much by a couple of percent, we've been doing a lot of work to show this has got 5 million ounces plus. We can just drill down the ore shoots to get to 3 million. And here's one of the ore shoots. It's completely open. We can keep drilling down and along strike. It might continue another 1,000 meters to the south. We don't know, but it looks very promising. We've been drilling this year also on Cacao. We think there's another 1 million ounces on Cacao, and we have a preserved vein system over here. And here's Cacao. As a bird's eye view, we've got 60,000 ounces over here, but it goes for 4,000 meters. And you've got the grade on the surface with the artisanal miners. We put this release out earlier this year. Importantly here, we found the vein. We've doubled the strike length to over 1 kilometer. And importantly, we've got the thickness of over 10 meters true width. So far, the best intercept's been 15 meters at 4 grams. But when we drill around here, as we go lower in the system, we're going to hit the higher grade ore shoots, and we should get some 10-gram material. Environmental and social, we have a great relationship at the moment with the local community. We're distributing 585-gallon water containers per month for drinking water. We invested $200,000 in a water purification plant. We have big engagement groups, and we do a lot with the community. And we're training 112 people at the moment. I was there giving certificates to, we've trained 54 Caterpillar truck drivers for their basic Caterpillar operating licenses, and we've done all that, and I gave some certificates out a couple of weeks ago. Here's the shareholder structure. So the 2 directors, myself and Jim Allen, have 22%, so quite a lot of skin in the game. So to wrap up, our base case is for 100,000 ounce production. We're fully permitted to construct and operate from 3 pits. We can get to 150,000 in a 2-staged approach. The development of the underground will be out of cash flow. We believe we're on a major district. We're very high grade. of 5 million ounces to 10 million ounces. We're very high grade, low all-in sustaining cash costs on the open pit material will be about $820 per ounce, and we're pretty cheap. So this year has been one of major advancement. We've had 17,000 meters of drilling we've done. That's a combination of infill drilling and exploration drilling and geotechnical drilling. We've done PEAs. We've cracked the back of all the FS studies for bankable study, the work done on the ground. We're now just in the report writing stage. We bought a mill and we bought a lot more land, and there's a clear de-risk and value creation that we've done this year. And we've hired more people. We've hired CFO, mining engineers, architects, civil engineers. We have a team to take this to the next level. Thank you.
First up, and we had this sent in very early. What steps are needed to achieve successful land swap with the cooperative? And for those who don't know, could you explain the context of the question?
There is a cooperative in the area. The government granted many years ago the cooperative a small piece of land. We're fully aware of the cooperative. We have very good relationships with the cooperative. We've just been drilling on their land, for example. We do little deals to get access for geotech drilling, infill drilling. We provide them with equipment. We provide, i.e. safety equipment. We have a mining engineer who inspects their shafts and their pit to make sure they're safe. We give them ropes. We do first aid. Obviously, our training programs are all linked in with training the artisanal miners. That's our future workforce. So at some stage we will relocate. There is an artisanal miner relocation plan. I'm not going to negotiate that with the artisanal miners over this particular medium. That would be totally inappropriate. It is confidential, but we're confident we can relocate. We have identified areas of land and own land on which they can be relocated to.
Next question, is Nicaragua stable politically, and are there other listed companies active in Nicaragua?
And politically, it's very stable at the moment. The president's been re-elected for the 4th term. In the political context, as people would have seen, there have been a talk by the international community of a lack of free and fair elections. But the Sandinista Party and President Ortega do have a firm grip of most organs of state, and they're supportive of mining. So can we operate there? Yes. Are there other listed companies there? Yes. There's Calibre Mining on the TSX, which has 2 producing mines. There's Macu Mining, which has 1 producing mine, which it built in the pandemic, and has had about 4 months of commercial gold pour for only 500 tons a day, but they've still built it, and well done to them. Mineros SA is operating there. A Bogota and Toronto listed company has the Bonanza mine that produces 100,000 ounces of gold a year. Rio Tinto, and UK listed, has an earn-in agreement with Calibers, so it's for 10 years to look for copper porphyry deposits. And Royal Road Minerals, TSX listed. Polaris is involved in geothermal energy and a listed company. Yes, so I've just named half a dozen companies that are listed there.
Next question is about financing. What's the environment like for mine financing?
Well, I think that's a broad question. We're trying to keep our capex down to 100 million, and we'll wait and see what the FS says, because that's plus or minus 50% capex. We traditionally, projects like this can be financed 60% debt to equity. We can also put gold loans in there as well as debt. The banks are less likely to, if we said 60 million of debt, for example, are less likely to be interested. It's too small. And banks like SocGen and other banks like debt packages to be in the hundreds of millions. Private equity can take bigger risks, and there are several private equity funds that provide debt only within the mining sector. The other area to finance the debt is gold loans. So you collateralize the loan obligation on the future production, which is why we're keen to show 4 gram and super high grade, because that's very attractive for someone who wants a physical metal. Gold is a 12 trillion US dollar currency. It's the best way to look at it, so they can hedge that out. So all those options are available to us, just like they are to other people in more risky jurisdictions. There's also the regional development banks that have approached us, like BICE, Bank for Central Economic Integration, Central American Economic Integration. They lent $400 million to Nicaragua in recent years, and local consortiums of banks. So the banking, that's how I see the debt side. In terms of the equity side, the specialists, the private equity firms and or institutional investors who are most likely to provide the equity within this.
This questioner has asked, I'm impressed with the ESG focus on local employment and community input, but what and when is the exit strategy, and how does that affect long-term shareholders?
Could you say the second part? When is
Sure.
the exit strategy?
Yeah, the question has asked, what and when is the exit strategy, and how does that affect long-term shareholders?
Well, the strategy is to construct and operate the mine and to develop a 5 million ounce to 10 million ounce gold district. That's the strategy. Are we going to exit as a company from Nicaragua? Are we going to put it up for sale? No, that's not the plan at the moment. So from that perspective, there isn't. I think in any event, there are very few projects around the world that have got as advanced as this that are completely shovel ready and de-risked. So because we're listed, is it likely with a supply cliff in gold? In other words, all the low-hanging fruit's been found around the world in gold. There aren't many projects. There's probably half a dozen projects out there globally that have 2.5 million ounces, the potential to be 5 to 10 million, have all the permits, have bought the land, have de-risked this materially, bought the mill, and have a bankable study just around the corner. So is it likely at this stage, when it's on a plate for someone to come over the hill and look at the company? Yes, that's likely. We're in the capital markets. And in the backdrop of capital markets, gold is when people are mining, it's a depleting asset, and all these producers out there need to replace their depleting ounces and expand as well, because they want to expand at the same time as deplete. So there's every possibility that Condor will prove very attractive to somebody at a future date, but I can't say more than that at the moment, and that's also up for the person answering the question to figure that out.
The questioner has asked about toll milling, and they've asked, can you explain what toll milling is, please?
Yeah, certainly. Toll milling is when you've got the gold, in Condor's sense, we've got the gold, we've got the permits, we've drilled it all out, and we could start digging it out ourselves, if you like, and trucking it over. But instead of putting it through our own processing plant, because we haven't built it, we could take it over to somebody else's that's got spare capacity. So there's an existing mill in Nicaragua which has spare capacity. It's running at 50% spare capacity. So we would have to reach an agreement with them to say, we'll do the mining, we'll do the trucking, or we'll share a trucking cost. What's the agreement for processing? So they would buy the rock off us, if you like, with the gold in it, and they would crush it, grind it, crush it, and produce it into gold. And there would be a revenue split or a profit split within that toll milling agreement. So it's a way of getting early cash flow without having any capex.
Then the final question is a clarification on projected timelines, kind of key milestones for 2022, and the timeframes around construction and then moving into production.
Well, definitely next year will be a construction year. We need to get the FS out in Q1 of next year. Once we have the FS out, people will then be able to look at that, i.e. the debt providers and the project finance providers be able to look at the FS study, which is all independently done by UK firm SRK Consulting, backed by Hanlon Engineering in Arizona and Tierra Group on the tailings in Denver, Colorado. We'll be able to look at that and see what the payback periods is and so on. So we've hired a new CFO on the 1st of September called John Seberg from Calibre Mining in Nicaragua. I'm just on a call with him with an investment banker today in Canada. So we are actively looking at the moment as to what is the optimal financing mix for the project finance to construct the mine. We will also appoint an EPCM contractor, i.e. that's the engineering, procurement, construction and management contractor, to materially de-risk the execution side of the construction period. The construction period from having the finance, if this was in Australia, they tell me is 9 months. In Nicaragua, it's probably 12, maybe a bit more. So there are certain steps we've got to run through. We've got to get the FS out. People are only going to give us the project finance when we've got that, not before, which is why we're doing that. We can, ahead of that, sign CAs with certain debt providers to accelerate that process. We already have the mill in the country, so most people produce an FS and then say, right, it's bankable. We're going to order a mill, and then spend 4 months designing the mill, and it takes another 40 weeks to 45 weeks to build, another 2 to 3 months to ship it. In fact, it probably takes you 6 months to ship it in today's bottleneck ports, because we've just done it. So I know it takes much longer to ship than people say. And the great advantage we have is that we already have the mill. We have the key long lead item, and everything else we can order a lot quicker. And part of the exercise that Hanlon are doing for us on the construction, and the plants laid out to double that construction, is what are the other long lead items? What are the costs brand new, and what are the costs secondhand, if you like? And so we'll be working through a twin capex study for brand new equipment, and then what's the minimum we need to actually get this into production and cash flow. That's all I can say. I haven't deliberately not put out firm timelines on this is when our first gold pour is going to be. I'm just giving an indication there where I think the direction of travel. When I have something firm, we will put that out, but we want to only put something out when we know we can commit to it and keep to it.
Lovely, Mark, that seems eminently fair, and thank you very much for joining us this evening. I think we've had Mark do a couple of updates since we've been running these webinars, which is nearly 2 years now, since the start of the pandemic, and it seems like they've made terrific progress. So thank you very much for keeping us updated and joining us this evening.
Thank you. No, it's been an amazing year of material achievements. Sadly, it's not reflected in the share price for the shareholders, but the project has never been in better shape operationally than it is today.
On that note, I think we're done for this evening. So thank you for Mark. Thank you for other presenters.